welcome to Markets Today. This evening, I'm Sonia Shenoy and with me is Reema Tendulkar. Good day of trade for the markets. We wrapped up the July series and now we head into August with the Nifty well above that 8,400 mark. And today, interestingly, the pocket that was defeated all through the year, PSU banks, made a big comeback and all of these stocks were up about 9 to 10%. Hi, Reema.
Hi, Sonia. And yes, despite many of the PSU banks actually coming out with not such a great asset quality, there hasn't been an improvement, even though you could say that the worsening has not been as bad. But apart from that, we also got some positive cues. The Union Cabinet clearing the constitutional amendment to the GST bill. So some domestic cues were also positive, which helped the Nifty close above that 8,400 mark. But let's kickstart the show with the top stories. The Nifty ends the day with gains of nearly 0.5% at 84.21, despite coming off nearly 0.5% from the day's high. So the July series, the Midcaps lead the frontliners. The Nifty rallies 0.3%, while the Midcaps gain 4%. Stocks like Cipla, Bank of Baroda and Asian Paints rally nearly 15% in the July series.
And it was a busy day on the earnings calendar. Bank of Baroda surged 10% post-results, while ITC and Dr. Reddy's rallied 5% on a margin beat. All eyes now on L&T and ICICI Bank as they declare their numbers tomorrow.
PSU banks gained 3.5% as CNBC TV18 learns that the Finance Ministry will seek the Parliament's nod tomorrow to provide the first tranche of the PSU bank recapitalization funds. The Finance Ministry could provide 12,000 crores in the first supplementary demands for grant.
All right, those were all the top headlines, and here are the experts that we have lined up for you on the show tonight. Dipen Sheth of HDFC Securities will join in with his take on the markets. We'll also get you the managements of Bank of Baroda, amongst others, to talk about their quarterly numbers. And from the global arena, Bill Gross of Janus Capital will join in with his take on the global cues driving the markets.
But straight to the day's trading action, no expiry jitters on Dalal Street as the bulls maintain the winning momentum. The Nifty surged nearly 50 points to climb above that 8,400 mark. The Sensex rallied 140 points to move closer to the 28,000 level. The Midcaps outperformed the blue chips once again, with the Midcap index gaining nearly 1%. Anuj is here to give us a wrap of today's trading action. Anuj, it's a positive close to the July series and the Nifty above 8,400.
Yeah, positive close to the July series. It was a volatile series, all right, but the closing was quite okay. And the fact that the Nifty closed above 8,400 would soothe a lot of nerves. But today was expiry, so really the bigger trend would emerge from the August series. But what was good from Bull's point of view today was that one sector stood out, which was PSU banks. When PSU banks move, traders feel good, and you saw a big move in PSU banks. Not just that, pharma stocks also supported. So let's talk about some of the stocks then. Right on top, of course, was all about PSU banks. Now, Bank of Baroda came out with numbers. That stock was up 10%, but the street will be more enthused with what happened to PNBs because it's already delivered numbers and they have been digressed. So, for the stock to have a follow-on rally of 10%, that was really big. State Bank of India as well was up 1%. In the pharma space, it's curious right now. Dr. Reddy's new lifetime highs after decent numbers. Cipla was up 5%. And you do get a sense that a lot of money is moving out of Sun Pharma and going into Reddy's and Cipla. Sun Pharma down 2% today as well. On the gaining side, some other gainers today, heavyweights, ITC, HDFC. Both these stocks were up quite a bit. And HUL was the other stock that gained in trade. On the losing side, you had stocks like NMDC, Infosys, and Kotak Mahindra. All of them lower by between 1 to 2% in trade. It was about a lot of mid-caps surging today. A lot of high beta names first. Unitech was up 18%, GMR 7%, JP Associates 8%, and a lot of high pedigree names as well did well. Dish TV was up about 6%, NIIT was up 10%, and Bombay Dyeing was up about 8%. So, good day for the market. Volatile series, but the hopes would be that in August series, the market may again go back towards that 8,600, 8,650, where it's seen some resistance. But for today, it was a good day.
Oh yes, it was a good day, but we must be aware that many of these PSU banks like Bank of Baroda continue to report disappointing earnings, so it could just be a dead cat bounce, only time will tell. But on that note, let's get in a market voice. Dipen Sheth, Head Institutional Research at HDFC Securities, expects the markets to consolidate at current levels, and he says the results season is unlikely to provide any clear direction to the markets. Listen in.
If you look at the 1Q numbers, they are mostly uninspiring if you're a pessimist. And they don't matter if you want to be an optimist, because you are buying into the longer term healing of the economy. So you can take sides here. And this is typical India, you know, we'll take 2 steps forward, 1 step back, and then we'll go nowhere for a while. So I think it's the nowhere for a while phase.
But Michael Every, head of market research at Asia Pacific of Rabobank, says Indian markets continue to remain in a sweet spot and macro fundamentals look good.
In terms of the Indian market, I think one should always look at fundamentals, and that's how I look at everything. There are many different ways to trade markets and play markets. I just like to look at what the fundamental story is telling me. And in India's case, I still think it's a good news story. Demographically, it's wonderful. Growth is picking up. We've got a government that is slowly pushing ahead with the right kind of reforms. All we need to see is inflation coming down, interest rates coming down a little bit, and I think that things can continue to look even more positive than they are now.
Okay, it was all about the banks today. So from the banking space, Kotak Mahindra Bank announced its numbers post-market hours. And remember, this is the first earnings report after the integration with ING Vysya was completed. So there was some disappointment and higher integration costs that the bank had to bear. Let's go across now to Ekta Batra, who's been doing all the number crunching for us. Ekta, not a great debut for Kotak ING Vysya?
Absolutely. It was a weak quarter for Kotak as opposed to the expectations. So, for example, the standalone business recorded an NII of 1598 crores versus an estimated 1600 crores that the street was working with, 1600 crores plus. So it was a little bit of a disappointment on the NII. The profit was actually a bigger disappointment, came in at 190 crores versus an estimated at least 500 to 500 plus crores in terms of profits this quarter. The reason for that was because of higher provisions. Provisions were at 305 crores, plus the impact from the merger and integration costs, which included retirers, benefits, provisions and contingencies. Like I mentioned, integration costs of 63 crores, including stamp duty, payment of additional interest on savings account and other such factors, which added to the stress in terms of the P&L this time round. In terms of the asset quality, all eyes were waiting for what the asset quality would be on an integrated basis. So the gross NPA came in at over 2,500 crores, the net NPA at around 1,173 crores, with the gross NPA worsening to 2.3 versus 1.9% sequentially, and the net NPA also worsening. But the bank did in the press release mention there was no 525, no CDR, no sale of loans to asset reconstruction companies, at least no sale of loans on a standalone basis. And in terms of restructured loans, it was 418 crores, of which 271 crores was from ING, and about 6% of ING's book is under various forms of stress, which includes sale of loans to asset reconstruction companies, CDR, restructured book, as well as the watch list. So asset quality did disappoint, but the view on the street is that maybe it would recover in coming quarters. In terms of the other standalone highlights, what stood out was that the net interest margin was above estimates. It was above 4%. In terms of the consolidated business also, it was a tad bit of a disappointment, but a disappointment which was led by a couple of subsidiaries and their performance in Kotak's business this time.
And today, Ekta belonged to public sector banks. So before we let you go, let's also talk about the other public sector banks that declared their earnings. How did they look?
Well, in terms of the public sector banks, we start with Bank of Baroda, where largely it was a weak quarter if you had to look at it. The NII was in single digits, up 4%. Profit was largely in line with what the street was expecting, which was a decline of 20%. The gross NPAs worsened 41 basis points sequentially. Slippages were at 1,600 crores, which worsened Q on Q. And the refinancing was at the upper end of what other banks have been reporting, between 4,000 to 5,000 crores. Oriented Bank of Commerce, no respite there. Gross NPA worsened to 5.85%. Slippages were high at 1,600 crores. And the bank restructured 4 accounts under 525 worth 1,400 crores. Vijaya Bank also, gross NPA up 17.5% on an absolute basis, but probably the NII lifted sentiment, which was up 24%. Dena Bank, where the profit was down 81%, the company recorded a tax write-back. If it wasn't for that, it would have been a weak quarter. And State Bank of Mysore, where the gross NPA was up 4.21% versus 4%, but on a year-on-year basis, it was quite stable.
We know for a fact that there are certain affected sectors where the problems are not getting resolved. For example, the steel sector, where we see that global steel prices have been depressed. There is accusation on China for dumping, and a lot of steel companies are in grave problem. And when the it's not just steel. Global commodity prices have come down, and the profitability of commodities has in fact declined. For example, again, sugar. Sugar is in all sorts of problems. So therefore, I don't see that these problems will easily work out themselves out in the systems very soon. Earlier, the financing we used to do was not realistic. Sure. So rather than kick the ball down the road, I think the kind of repayment periods that we are now setting are far more realistic.
Predicting asset quality quarter to quarter is a very difficult task because, as you can see, one or two accounts sometimes create a difference. But we hope to, in the percentage of gross NPA and net NPA, we expect going forward by the end of the year, financial year, the percentage to come down from what it is in Q1. But look at the profitability should remain good, because if you look at the basic on the operating front of the bank, the NII improving and the NIM improving, we expect profitability to be stable.
Okay, well, moving away from banks, ITC also reported their first quarter numbers today. The revenues missed estimates as the cigarette sales have slowed down, but the margins expanded, and that gave a bit of a relief rally to the stock, which was up 4%. Agam Vakil is here to give us the analysis. Agam.
So we saw a decline in volumes, or rather revenues, up as much as down as much as 7% on a year-on-year basis, with profits moving up as much as 3.6%. But the surprise here was the expansion in margins. Gross margins particularly had expanded by as much as 600 basis points, and this is on the back of the cigarette revenues. Now, while cigarette revenues have declined by as much as 1.2%, we are looking at EBIT margins for cigarette segment at around 67%, which is a positive. On the other hand, we've also seen steady numbers coming in from the FMCG segment, despite the slowdown that we've seen in the industry overall. But when it comes to the hotels, agribusiness, as well as the papers business, we are looking at subdued performances. On overall basis, we are looking at the stock, which has more or less priced in the worst. But today is the day where we saw a little bit of an up move once again because of that relief provided by this particular stock. But on the whole, the numbers more or less in line, perhaps a tad miss on the headline numbers.
Okay, Agam, thanks so much for that. And Dr. Reddy's too posted a very good set of Q1 earnings. And just like ITC, it was higher margins which managed to offset the miss in revenues. Archana is here to walk us through the earnings. Archana?
Well, yes, an operationally very good quarter for Dr. Reddy's, and on profitability front, they outperformed almost all street estimates. Whether it was net profit, which saw a jump of 14% to 626 crore rupees, operating profit was up 13% at 771 crore rupees, and a very, very healthy operating profit margin of 20.5%. Revenue growth, like you pointed, was a drag which missed street estimates and saw a growth of only 7%. This despite a good run in the US market, but what pulled down revenues was a meager 1.4% growth in its PSAI segment, or the Pharma Services and API business. If we talk of the geographical performance, US market saw a good growth of about 14%, owing to a strong performance in their franchisee business of injectables and market share gains in some of the key molecules that they had launched, like sirolimus, Walsite and Habitrol. In this quarter, they also made about 6 filings in the US market. India business was steady at 19% growth. Emerging markets was where there was a drag. The market saw a slump of about 20% in sales growth for the company, pulled down primarily by a Russia market, where because of macroeconomic uncertainty and ruble depreciation continuing, the market in Russia dropped, the sales in Russia dropped about 45%. So that was a drag. But overall, if we look at the numbers, and the stock also reacted in a way, operationally a very, very strong quarter, as the numbers pointed out. Back to you.
Oh, yes, indeed. In fact, the stock has been hitting fresh highs, and now that run-up has been justified by very good numbers. Thanks so much, Archana, for joining us. We'll take a short break, but coming up next, Sudarshan Sukhani joins in to talk about the technicals, and we'll also look at other companies that declared their numbers today. Stay with us.